Hey gang, this is Mike with My Real Estate Dojo, and I want to talk to you about a very important idea that I learned in America that's been a life changer for my life, and I want to share it with you guys. And I know it's very hard to believe because I had a hard time believing it myself when I first learned it, but I still took action to prove that if this is bullshit or if this is the real shit. And I'm here to tell you, for me, it's been the real shit, and I just want to share that with you. And the idea is called subject to. Now, what is subject to? Subject to, by definition, means like buying a property subject to its existing mortgage, or buying a property subject to his old loan, or original loan, or underneath mortgage. Whatever, it's all the same exact thing. I'm just explaining to you different ways so you understand it. Simply put, a subject to is just taking over the existing seller's loan and just taking over the seller's payment. It's very simple. Now, okay, when I talk about subject to, many of us are thinking about real estate, which is 100% true. But let me give you one example where you could use it to buy a car. All right, guys, everybody knows that I'm looking for a Tesla. I want to buy a Tesla, and I don't know, about 6-7 months ago, I was looking for a Tesla, and I came across this seller in Dallas area, and he was selling a 2015 Tesla, and I'm looking for a 2016, but I said, hey, let me talk to him. Is it working?
Yeah.
All right, guys, I think we got disconnected. So what I was talking about is how I use subject to almost buy me a 2015 Tesla, which is basically taking over the payments. So I was looking online, and there was a seller. He seemed he was motivated. So he had a Tesla, brand spanking new, and I told him that whatever CarMax is gonna offer you, I will give you $3,000 more than they're gonna give you. So he went to CarMax, and CarMax was gonna only offer him roughly about 50 grand with this brand new Tesla. The problem was his loan was like $75,000, okay? Because he had just bought the fucking car. So I told him, hey, I'll give you the $3,000 more than the fucking CarMax give you. So the guy rushed over to my house and started showing me the car. And when I saw him, I felt bad for him because he was a young guy. He worked out. He was a soldier. And I thought about, man, you're just gonna lose $25,000 of negative equity, because when you go to a CarMax or you sell it to me, you're gonna have to pay the difference. And he said, yeah, man, I have no other choice. I've been wanting to get to this military job for a long time, and they just offered me, so I'm just selling my dreams. And I just thought about, damn, dude, I don't want to sell this guy and, you know, pay him cash for this car and make him lose so much money, and I didn't want him to do it with CarMax. So I thought about it, and I said, dude, I use a strategy called subject to buying houses. How would you like if I could save you the $25,000, and instead of you bringing $25,000 to closing for me or for the CarMax guy, why don't I just make your monthly payments? His payments were like roughly $1,000. And the guy thought about it, and he was like, okay, that sounds great. And I said, great. And it was a done deal. And the guy was motivated. He wanted to sell. His only option was fork over $25,000, which he was willing and ready to go ahead and do, or do a subject to, and he was down to do it. But then I thought about it a little bit, and I thought about, like, you know, it's a little different, and I didn't want to spend this kind of money a month and not really having the ownership of my name. So I thought, I just turned the guy down. I said, you know what, dude, I really don't want to do a subject to on this property, on this car. And so, but I had the opportunity to buy the fucking brand new Tesla. Just all I had to come up with the first month payments to pay the monthly. That's it. No down payment, no nothing. So that brings me to the story of subject to and taking over payments for real estate. So you could do that with cars, boats, motorcycles, real estate. Now with real estate, many people think that a subject to can only be done with, for example, rental properties. And this is here I'm trying to tell you, that's totally wrong, guys. If you're a fix and flipper, you can still use subject to tactic, and I'll explain in a little second. If you want to buy your own personal house, like, you know, instead of going to the bank, you could use the subject to method. Okay, Now, let's talk about if you want to buy a house for your own self to move into. So your option A is to go traditionally, where you go to the bank and they qualify you, and you put your 10-20% down, and you sign over your fucking life over to them, if, you know, which is like personal note, where you promise them that if you default, if you don't make the payments, they're gonna take your house away, but more importantly, they're gonna ruin your fucking credit and all that good stuff. So that's option A. And you hire a little realtor, and they drive you around, and you know, they may only show you 5 houses when you really want to look at 20. So see, like, you don't have much control. You're just going with the herd, like, you know, to the slaughterhouse per se, okay? The other way is you're a retail buyer, same situation, you want to buy a house, but now you spend a little time to educate yourself, you know, maybe 2 or 3 months to educate yourself, and now you have total control. So instead of going to the bank and begging them for money and giving them 20% and hanging yourself and signing your life away and all that good stuff, you're in total control, because you're gonna find a seller that's motivated, and you're just gonna take over their payments. So there's a lot of benefits of buying a property subject to for your own home, from not paying all the junk fees, not having the loan under your name, having a non-recourse loan. I mean, if you guys don't know what I'm talking about, please get on my YouTube channel. I have a lot of stuff about what is a non-recourse loan, the benefits of it subject to. I just did a video about how to buy a house for your own personal home. So even if you want to buy your own personal home, it's a great way to invest, to learn, and spend a little bit of money, maybe an advertisement, or if you could do it totally for free if you're willing to do stuff like door knocking, cold calling, things of that nature, to find yourself a personal deal. Now, if you're an investor and you want to do fix and flips, dude, it's a no-brainer, guys. It's like, instead of borrowing the money from a hard money lender, let's say, you know, the house is worth $150 and you got to borrow money from the lender, a hard money lender, for $80 to give the seller cash for $80. Instead of doing that and paying all these fees, you work something out with the seller, where the seller just lets you make his monthly payments at such a low ass fucking interest rate, and then when you fix the house, then you pay the seller, then you cash out the seller. Or, you know, there's so many different ways to slice it. You know, it just depends on the situation and on the deal, guys. This is what I call the American dream. You could have the seller come in with you on the profits, or you could have the seller, you say, hey, you know, it's worth 80, I'm gonna give you cash for 80, but I'm willing to give you 85 if you wait till I fix this property up and then I sell it, and then at that time I'm gonna give you your 80. See, that way you didn't have to come up with the fucking 80. All you had to come up with is the repair money, guys. So I guess what I'm trying to say is, subject to is a very, 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 very powerful way to buy property without your own credit, without using your own money, and you're gonna need some money. I'm not saying it's the no money down. For example, if you want to buy a property as a retail buyer and you're gonna live in it, you're gonna have to go to put your 10-20% down, pay all those closing fees, all that bullshit, right? All those junk fees. That's gonna be a lot of money. Well, on a subject to, you might have to only spend 1/3 of that money. But now you're in total control. You have so many benefits, and your liability is so much less. Okay, so one is easier. The other one is going to require some time to learn, you know, to educate yourself. But you're in more control. There's more power, and definitely way more benefits. So if you want to be a fix and flipper, you could definitely use the subject to strategy to buy property. If you want to be a landlord, again, it's a great way to buy properties subject to. Let me give you an example, guys. Soraya just sold this deal to, let's say this gentleman, I'm just going to call him Dan. And the deal was like, the payments were behind 4 months, and he had to pay a assignment fee of, let's say, $3,000. So let's say roughly $7,000, $8,000 to buy a property subject to. The monthly payments on that property were like, from, if I remember right, like roughly $1,038, and you could rent that property, if I remember right, it's off my head, I'm just freestyling, maybe like $1,300, $1,400, okay? So let's just go with the $1,300. Let's make it easy. $1,000, you rent it for $1,300, $1,000 is the mortgage. You rent it for $1,300, and that the difference. When I say the mortgage is PITI, principal, interest, tax, and insurance. So $1,000 is going to cover the whole aspect. So you rent it for $1,300, you're getting $300. If you do $300 a month times 12, you can see what that number is. Now, if you divide that number into what this investor Dan bought this property subject to, the $7,000 or $10,000, you can see the cash on cash return, which is so much more than I think like 30-40%, if not more. Where if you bought that same deal for $100,000 cash and you rented it out for $1,300, after you subtract your insurance and taxes, whatever's left over, you take that number and you multiply it by 12, and you take that number, divide it into the $100,000 you invest in it, you see you'll get a good return. It's probably roughly like 12-15%. But it's not as much as the way Dan got. Dan probably got 50% cash on cash return. So buying property subject to decreases your risk because you're putting so little money into it, because you're dealing with motivated sellers, and you get significant amount of cash on cash return, and then you get significant amount of a return, especially if you buy properties in an appreciating area that are going to appreciate in a few years. And the risk is so much less because the loan is not under your name. When somebody pulls out your credit or your company EIN number, the debt is not associated with them. Your debt to income ratio is extremely great. And it's just such a powerful way to buy property. So when I learned it, I was shocked that it was possible, guys. I thought it was illegal, and you know, I was just like, yeah, I was hesitant, and that's why I'm out here preaching the good word, because, dude, you know, this thing needs to be out there. Like, who can this be? Anybody that has a business and they can't get a loan. You know, it doesn't matter if you have good credit, bad credit. Sometimes when you own businesses, they're not gonna give you money, dude. You know, it's like, this is why I got into buying property subject to. It was 2007, fourth quarter, market had crashed. I had money and I wanted to buy as a retail buyer. I wasn't even an investor, dude. I wasn't even thinking like that. As a retail buyer, I knew it was a good time to buy fucking a house for myself, because I've been living in that nice ass loft in Las Colinas, paying a lot of money for a 1-bedroom apartment, the same thing people pay for a 3 or 4-bedroom houses, which is a lot of money. And so, market had crashed. Man, I prepped my fucking loan paperwork like no other retail buyer. I had my tax incomes. I had gone back 5-6 years. I mean, just money in the bank, like enough money to buy the property cash, but I didn't want to pay all cash for it because I wanted to save some of my money, because I know the market had crashed, but I didn't know what I was going to do with it. So, but I wanted to buy real estate because for my own house. But none of these fucking bankers would lend me the money because the economy had constructed. The banks were now lending because they had just ran into all these deadbeats that didn't have any proof of funds, but they're still lending them money, subprime lending, and all that bullshit. So now I was a bona fide buyer